Good morning, everybody. Here with some early morning grain and oilseed comments on this Thursday, November 15th. Okay, we had a little bit of movement in the overnight session. We seemingly coming from the beans around middle of the night or so. And it's one of the three topics we've been talking about that the trade's looking at as far as what's going on with the trade wars. One of the wire services ran a story about China has delivered a written response to the U.S. demands for the wide-ranging trade reforms and a move that could trigger more formal negotiations to resolve a withering trade war between the two economies. So once again, it's on again, off again as far as the trade war talk goes. We'd have to say that what we have been seeing going into this meeting at the end of the month, that there's been a little bit better verbiage than anti-verbiage. But you continue to read the story. Some people say it's still just a starting point. There's really nothing new, that the negotiations still have to go on, and that maybe they're not even close. So we continue to have that. But we have been kind of lumbering around with our prices, and it did give the market a little bit of a goose in the overnight trade. Because like I said, we've been sitting here. Took the bean market up almost 15 cents. Now seemingly we're backing off a little bit. We're only up 7 cents. Corn and wheat kind of followed along a little bit. Corn's up around 2 cents, wheat up 5, and the products were a little bit better as well. So we talk about one of our topics being the trade war rhetoric going on. The other two is what's going on with South America as far as their growing season goes. Obviously, you can say anything about that as well. It's still early, but no calamities down there. And then the other thing is what's going on with our U.S. export demand, and are we able to be taking down our sizable carryout numbers. We're going to get a couple of demand numbers coming on out here today, that being the delayed weekly ethanol numbers, how much corn we are grinding to go and produce ethanol, so that'll be out roughly at around 10 o'clock. Then an hour later, we're going to get our monthly NOPA crush number coming out for soybeans. The good news is that the trade's looking for a strong number, and throughout the week, the bean market has been holding up a little bit better than the grains. It's been getting a little bit of nice news. I guess we had a good export number on Monday. The crop harvest is running a little bit behind. We had a couple of daily announcements, and like I said, they're looking for a strong NOPA crush number. But on the flip side of that, with the beans rallying here of late, we've really demised the crushing margins. We're almost at our lows for the move. So once again, going forward, much like how we're not seeing much bean demand, are we going to continue to see the crush demand coming for the beans as the margins continue to lose? But once again, that'll be coming out at 11 o'clock. Other than that, because of the holiday on Monday, this Monday, the export sales will be coming on out tomorrow, so that'll be delayed in lieu with also the weekly commitment of traders report, of which we're not seeing much of a budge as far as estimates go, still seemingly having a modest net short position in the soft red winter wheat, and in the beans, and in the soybean oil, and only small net long positions in the corn and in the soybean meal. So once again, the trade wars, the U.S. demand, South America, I'd have to say that even if we were to get a little bit of compromise and or foot forward going with the Chinese, we still have some high hurdles to overcome with that U.S. demand and our carryouts, and if South America has a good crop. Once again, leads one to believe that probes above $4 March corn and $9 March beans should be somewhat short-lived and somewhat of a hurdle to have any sustained rally going from there. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.